The bank approved you at 6%. The dealer sold you 8. That tiny-looking gap can quietly cost you thousands. And the worst part is, you may have thanked them for getting the deal done. Because when you are sitting across that desk, they are not usually training your eyes on the rate. They are training your eyes on the payment. Can you do $4.99 a month? Can you stretch to $5.29? And while you are trying to survive the monthly payment, the real money may already be moving behind the deal. Here is the part most people are never taught. In dealer-arranged financing, the lender can quote the dealer one rate. That is called the buy rate. The rate you sign can be higher. That is the contract rate. The difference between those two numbers can compensate the dealer for arranging the financing. And before anybody gets cute, no. The argument is not that a dealer has to work for free. Arranging financing can be a real service. The question is much simpler. Did you know the price of that service before you signed? Because this is not just about one car loan. This is what happens when the person who needs the deal most gets the least information. Picture the room. You finally found the car. Maybe it is not your dream car. Maybe it is just the car that gets you to work, gets the kids to school, gets you out of asking people for rides. You already negotiated the price, or you think you did. You already gave them your information. You already waited longer than you wanted to wait. Now you are in the finance office. This is where the deal stops feeling like shopping and starts feeling like paperwork. And paperwork is where most people get tired. The person across the desk may be friendly. They may be professional. They may have helped you. None of that changes the structure. The structure is this. You need the car. They control the room. They know the terms. And you are trying to get out of there with a payment you can live with. That is the perfect moment to move your attention away from the rate, because a monthly payment feels real. You know if you can handle $500 a month. You can imagine that coming out of your bank account. But a PR, finance charge, amount financed, dealer-arranged financing, contract rate, buy rate. Those words feel like fog when you are already worn down. So let us clear the fog. In a direct loan, you go to a bank or credit union first. They tell you the terms they are willing to give you. You walk into the dealership already knowing your rate, your term, and your maximum loan amount. In dealer-arranged financing, the dealer sends your application to lenders. A lender may say, "We will buy this contract at this rate." That rate is the buy rate. Then the dealer may present you a higher rate. That higher rate is the contract rate, the rate you actually sign. The space between those numbers is where this video lives. Not because every deal has the same markup, not because every dealer does the same thing, not because this is always illegal, because the CFPB itself says the actual rate offered to you may be higher to compensate the dealer. And the Federal Reserve has described dealer markup as an additional amount of interest that can be added on top of the buy rate. So this is not a conspiracy theory. This is a mechanism. And once you understand the mechanism, the dealership desk looks different. When they ask, "Can you do $500 a month?" That may be a real question, but it is not the only question. The other question is, what rate did the lender approve before this deal got to me? And that question can change everything. Let us use simple numbers. Say you finance $35,000 over 72 months. At 6%, the payment is about $580 a month. Over the life of the loan, you pay about $6,764 in interest. Now move that same loan to 8%. The payment becomes about $614 a month. That is only about $34 more each month. $34 is where the trap hides. Because $34 does not feel like a financial emergency inside a finance office. It feels like, fine, whatever, I need the car. It feels like skipping takeout once. It feels like one more little compromise in a day full of compromises. But over the life of the loan, that 2-point difference becomes about $2,400 in extra interest. That is not the price of the car. That is not insurance. That is not repairs. That is not gas. That is the price of the money. And if you never knew the cheaper rate existed, you never got the chance to decide if that service was worth it. This is why the payment conversation is so powerful. The payment makes the deal feel smaller. The total interest shows you what the deal really costs, and the longer the term gets, the easier it is to hide pain inside a number that looks manageable today. That is not just a car problem. That is a broke person pricing problem. When you have excellent credit, a stable job, time to compare offers, and the ability to walk away, the system treats you one way. When you need the car today, your credit has some scars. Your old car is dead, and missing work means missing rent. The system treats you another way. People call that risk. Sometimes it is risk. But sometimes risk becomes a beautiful word for making the same life more expensive for the person with the fewest options. A person with great credit may get a low rate and build stability. A person with weaker credit may get a high rate, a higher payment, a longer term, and less room for mistakes. Then, if they fall behind, the system says, "See, you were risky." But look what happened. The price of recovery made recovery harder. That is the part that should bother you. Not that lenders price risk, not that dealers get paid, not that financing has a cost. The part that should bother you is when the person signing the contract does not understand where the cost moved. Because the buyer thinks the decision is, "Can I afford this payment?" But the real decision is bigger. What is the car price? What is the amount financed? What is the APR? What is the term? What is the finance charge? What is optional? What is the total amount I will pay? And what rate did the lender approve before it became the rate in front of me? That is a different conversation, and it is a conversation most people are not trained to have. Now here is the fair version. A dealer may shop your application to multiple lenders. That can save you time. It can create options. It can help a buyer who does not know where to start. There are honest people in dealerships. There are buyers who get good deals through dealer-arranged financing. There are situations where the dealer rate is competitive. Good. That still does not remove the question. If the service has value, show the price. If the rate is good, compare it. If the markup is fair, let the buyer understand it. The problem is not that someone got paid. The problem is when you were guided to stare at the monthly payment while the cost of the money sat behind the curtain. This is the difference between a deal and a machine. A deal is when both sides can see what is being exchanged. A machine is when the person with less information is asked to make the decision faster. And if you have ever bought a car under pressure, you know that feeling. The old car is making noises. The job is across town. Your kid has practice. Your partner needs the other vehicle. The bus route does not work. The rides are getting embarrassing. So when someone says, "Good news, we got you approved," it feels like rescue. And rescue is expensive. That sentence is bigger than car loans. Rescue is expensive. Need money before payday? Expensive. Need a car with bad credit? Expensive. Need furniture without cash? Expensive. Need a lower monthly payment? Expensive later. Need a second chance? The second chance often arrives with terms that make the third chance harder. That is why this channel exists. Not to make you feel stupid, to show you the shape of the room before you walk into it. So what do? First, before you go to the dealership, try to get financing quotes from a bank or credit union. Even if you do not use them, you now have a number in your hand. Second, compare the APR, not just the payment. Third, compare the total interest and total amount paid over the full term. Fourth, ask if there were other lender offers with lower rates or better terms. The CFPB says you can ask that. Fifth, ask the question most people never ask. What rate did the lender approve before dealer markup? They may not answer it the way you want. They may talk around it. They may say the rate is the rate. Fine. The point is not that one question magically fixes every deal. The point is that the room changes when you know what you are looking at. You stop negotiating only against the monthly payment. You start comparing the cost of the car, the cost of the loan, and the cost of the convenience. You slow the deal down. You ask what is optional. You make the payment prove itself against the total cost. And if the math does not make sense, you give yourself permission to walk out. That is hard. Because the machine works best when walking out feels impossible. But even if you cannot walk out, you can ask better questions. And better questions are how the machine starts losing control. So no, the lesson is not, never finance through a dealer. The lesson is not, every dealer is bad. The lesson is not, if you paid more, you are dumb. The lesson is this: do not let a monthly payment hypnotize you. Do not let approval feel like a favor before you understand the price. Do not sign a contract where the cost of the money is treated like background noise. Because the bank may have approved 6, the paper may say 8. And the difference between those numbers may be the moment the deal became more expensive than you realized. Once you see this one, you start seeing the whole machine. The same pattern shows up in credit cards, insurance, rent, subscriptions, payday apps, student loans, and every place where being short on options makes the price go up. I am building the checklist for this. The questions to ask, the numbers to compare, the lines to find before you sign. Join the list at theykeepyoubroke.com, and I will send it when it is ready. Because the system works best when you walk in alone. We are not doing that anymore.